Honorable John Mbadi, you've been itching to move this motion since yesterday, but I can't see your members of your committee in the House.
Thank you, Mr. Speaker.
Go ahead.
You know, Mr. Speaker, this thing of BPS has disappeared members.
Go ahead.
Mr. Speaker, allow me to move that this House adopts a report of the Public Accounts Committee on its examination of the report of the Auditor General on the financial statements for the national government ministries, departments and agencies for the financial year 2020-2021, which was laid on the table of the House on Thursday, 30th November 2023. Honorable Speaker, on behalf of my committee, the Public Accounts Committee, and also pursuant to Standing Order 199, I wish to move that this House adopts the report of the Committee on the audited financial statements of ministries, state departments, commissions, and independent officers for the financial year 2020-2021. Mr. Speaker, before I proceed further, I would want to mention the name of members of this committee who have worked tirelessly hard to make sure that we produce this voluminous report on 60 votes, Mr. Speaker, and paragraphs that were dealt with were 1,787. The membership of the Public Accounts Committee, which is the first one in this 13th Parliament, comprised of the following: of course, yours truly, Honorable CPA John Mbadi Ngongo, EGH MP Chairperson; Honorable Nicholas Tindi S. Mwale, MP Vice Chairperson; Honorable Ekomas Mwengi Mutuse, OGW MP; the Honorable Dr. Tiende Amolo, Senior Counsel EBS MP; the Honorable Dr. Wilberforce Ojambo Undo MP; the Honorable Samuel Kenuthia Gashobe MP; the Honorable Amina Udgon Siad MP; the Honorable David Kiplagat MP; the Honorable Edwin Mugo Gishuki MP; the Honorable Gabriel Gadoka Kagombe MP; the Honorable Mohamed Adan Ado MP; the Honorable Nabwera Daraja Nabi MP; the Honorable Victor Kipngetich Koech, who is also known as Mandazi MP; and the Honorable Yakub Ado Kuno MP. It is sad to note that we lost one of our members, Mr. Speaker, who is the Honorable Hassan Kulo Maalim, whose untimely demise cut short his membership of the committee. Mr. Speaker, the National Assembly exercises its oversights over national revenue and its expenditure pursuant to Article 95(4)(c) of the Constitution through Public Accounts Committee, which in turn also derives its mandate from Article 124(1) of the Constitution and Standing Order number 205 of the National Assembly Standing Orders. It's important to note that Article 229(8) of the Constitution requires that Parliament, within 3 months after receiving an audit report, to debate and consider the report and take appropriate action. Further, Mr. Speaker, this explains the reason why I was really itching that we move this report and dispense with it, is that further to that, Article 203(3) of the Constitution provides that the equitable share of the revenue raised nationally and allocated to the national government and county governments is to be calculated on the basis of the most recent audited accounts of revenue received as approved by the National Assembly. Mr. Speaker, as we speak, we are still using 2019-2020 audited and approved accounts. And therefore, we are today or this afternoon requesting this House to approve our report, which then will give effect to the 2020-2021 financial year. But I want to give confidence and report here, Mr. Speaker, that even as we deal with this report, my committee has actually done over 50% on the 2021-2022 financial year, and we intend to conclude our deliberations and witness hearings by latest early May, so that the 2021-2022 would be disposed of, and then we will immediately embark on 2022-2023 financial year. By the end of this year, Mr. Speaker, I guarantee this House that my committee will be up to date. We will be waiting for the Office of the Auditor General to conclude its audits on the 2023-2024. And therefore, the question of backlog of accounts will be a thing of the past. Having said that, Mr. Speaker, I wish to commend all the accounting officers whose financial statements received unqualified opinion. And here I want to be clear that unqualified opinion from the Auditor General is actually a good opinion. Qualified opinion is a negative opinion, and unqualified, contrary to the conventional English language, is actually a positive opinion. As to why accountants chose that route, that is something that we need maybe to find out or do research on. I also encourage, Mr. Speaker, at this point, all accounting officers to emulate these worthy examples. In this report, the committee has continued to hold individual officers to account for the various acts of omission and commission that occasioned either loss or illegal application of public funds. In a number of instances, Mr. Speaker, the committee has recommended specific follow-up actions, including further investigation by the investigative authorities, mostly EACC, because most of the crimes that would be committed in these reports are economic crimes. So the committee has recommended specific follow-up by relevant investigative authorities or agencies. And it is my hope that these recommendations, contrary to what we have seen previously, will be implemented within the shortest time possible by all those who are concerned, while taking into consideration public interest above everything else. Mr. Speaker, therefore, I want to give some highlights of the Auditor General's report for 2020-2021. I will begin, Mr. Speaker, by stating that in consideration of reports of various ministries, state departments and agencies, what are known as MDAs, the committee encountered cross-cutting and at times persistent matters that inform the general observations and recommendations. Specific observations and recommendations are, however, made to each query. So if you go to this report, Mr. Speaker, and it's a voluminous one, this report, then on each paragraph, you will get specific recommendations. What I'm going to do this afternoon is just to highlight or give an overview of those cross-cutting issues or common issues that probably needs much more attention from members of parliament. The general observation and recommendations include the following. First, or one, poor accounting standards and general incapacity of some accounting units. The committee found that despite all accounting units being staffed by qualified accountants and procurement officers, non-compliance with various provisions of the various laws elaborated above pointed to incompetence or resistance. So you find the laws are there, you have competent staff based on their academic qualifications, professional background, even experience in terms of number of years, but still violation of laws and is commonplace. The various breaches included inaccuracies in financial statements. Mr. Speaker, just imagine inaccuracies in financial statements. Yet, we have qualified accountants preparing these accounts. Failure to reconcile accounts, very basic, Mr. Speaker. If you are an accountant, you'd understand that reconciliation of accounts is one of the basic, actually the first units in accounting class. And failure to address prior year matters. Mr. Speaker, despite the fact that this House reports and asks for certain actions or interventions, by the time we get to the next cycle, the same are repeated again and again without any action. Accounting officers have also cited IFMIS challenges. Mr. Speaker, we have been with IFMIS for quite some time now. And so the issues of capacity to manage or use IFMIS should not arise at this stage. And therefore, the committee recommended the following, Mr. Speaker. First, the National Treasury should conduct periodic sensitization and capacity building for all accounting officers, finance staff and procurement officers across government on their responsibilities during the audit cycle and adherence to international public sector accounting standards. Number two, the relevant professional bodies like ISPAC and others should enforce compliance to standards and met out sanctions to those officers found to be willfully failing to discharge their functions. The second issue, that is also cross-cutting, is the late submission of supporting documentation. Further to the above, Mr. Speaker, the committee observed that some accounting officers failed to submit supportive documentation to the Auditor General on time. That is during the audit cycle. And Mr. Speaker, the audit cycle is very simple. First, the auditors report to the accounting entity or to the state agency. There is what we call entry meeting, where they hold meetings with the management. After that, on average, you'll find them taking 2 weeks, 3 weeks, even a month, engaging and asking accounting staff to provide documentation. After that, then a management letter is issued to the management and for their response, and they're supposed to respond. Once that is done, again, a window is there of a draft report, which again becomes ready and given to the management. Before now the final report, you find after all that process, still documentation are not provided to the Auditor General as required under Section 68 of the Public Finance Management Act and the various provisions of the Public Audit Act. This invariably led to the committee discussing matters that should ordinarily not feature in the final report, some as mundane as accounts not balancing, appearing before us to answer why accounts are not balancing. A whole permanent principal secretary coming to appear before us to answer as to why the accounts could not balance. The committee observed that accounts and finance staff in the various state agencies did not maintain financial statement in real time and waited for the end of the financial year to commence reconciliations. The committee therefore is recommending the following. 1, that accounting officers henceforth comply with Section 68(2)(k) of the Public Finance Management Act 2012 by providing supportive documentation on time. The committee in subsequent audits will prescribe punitive measures to those accounting officers that fail to adhere to requirements of the law in this regard. Further, Mr. Speaker, the committee will not entertain continuous engagement between officers of the Auditor General and accounting officers beyond the time period prescribed by law. All queries carried to the report of the Auditor General will be considered as such and attract requisite recommendations as is. Mr. Speaker, you still find that when we are holding our meetings, the accounting officers are still engaging the Office of the Auditor General in a bid to clear the audit queries. It is irregular, it is immoral, and my committee has taken a decision that from 2022-2023 financial year, we will not entertain that. 3, the Department Committee on Finance and National Planning considers amending the Public Finance Management Act 2012 to reduce the time period allowed for accounting officers to submit financial accounts to the Auditor General from 3 months to 1 month. Why this is so is that, you see, the accounting officers are engaged with the accounts. They are processing documents the whole year. And therefore, the moment the financial year comes to an end, they don't require more than 1 month to prepare accounts, because accounts are actually supposed to be prepared real time. And if anything, there is an accounting system. You need just to click the button and produce the financial statement, if we have a system that is working, so that we have more time for the Auditor General to conduct audit. We have only 6 months. 3 we give to the accounting officers to prepare accounts, and 3 we give to the Auditor General. We should increase the time allowable or given to the Auditor General to have 5 months to be able to audit and give a more reasoned opinion on our accounts. Number 3, Mr. Speaker, the third cross-cutting issue is long outstanding construction works, what is known as stalled projects. My committee, Mr. Speaker, encountered cases where some construction projects took inordinately long to complete for various reasons, including contractor non-performance, late exchequer issuances or releases, budget cuts, and general poor foresight and project management. And budget cuts here, Mr. Speaker, this House stands indicted because we allow too many supplementary budgets, which distorts and disrupts the budget implementation process, hence audit queries. This led to sunk costs and general lack of value for money, and in certain cases, interest charged by contractors. Mr. Speaker, my committee is in the process of compiling, in the next report, we will give a brief to this House how much we spend as a country on interest charged on delayed payments and interest charged on projects that are not completed. The committee, therefore, is recommending that the National Treasury should only approve projects that it can guarantee funding and completion within the medium-term economic framework. Mr. Speaker, no new project should, and I want to repeat, no new project should be commenced by an agency before all existing ones are completed or fully funded. Accounting officers are further warned of personal responsibility should contractors fail to perform, considering evaluation of technical and financial capacity of bidders is mandated under the procurement law. Any procurement process requires that the bidders are evaluated based on technical capacity and financial capacity. But then you still find that contractors are not able to discharge and complete projects for either lack of capacity or technical capacity or financial inability to finance the implementation or the execution of the contract. The failure to enforce and or recall performance guarantees will also be personally remedied by the accounting officers. The fourth cross-cutting issue, Mr. Speaker, is non-existent or weak internal audit functions. The committee noted numerous instances, Mr. Speaker, where internal audit committees were non-existent or did not meet regularly as prescribed by law. The law prescribes that there should be a meeting of the internal audit committees at least once every 3 months. But this is violated. This is not observed by many MDS. The committee observed that the current practice, where the accounting officer appointed and facilitated the audit committees, may be a hindrance to the effectiveness of these committees, as they are required to report to the same accounting officer on breaches by the same. Mr. Speaker, you find that the current practice is that these committees, which are actually supposed to oversight the accounting officers, are actually appointed by accounting officers. So how then do you appoint someone who is going to oversight you? It doesn't make sense, and therefore my committee is recommending that the National Treasury should submit proposal to the National Assembly within 6 months of adoption of this report, delinking internal audit functions in terms of appointment, facilitation, and reporting from accounting officers to an independent office. The fifth cross-cutting issue, Mr. Speaker, is the budgetary control and performance. Mr. Speaker, all ministries, state departments, and agencies, all, with the exception of none, faced budgetary underperformance predominantly attributed to late exchequer releases, supplementary budget cuts, or incapacity to collect appropriation in aid. This invariably led to underperformance of program objectives and lack of service provision to the public. My committee, therefore, is recommending that the National Treasury and the National Assembly, through the Budget and Appropriation Committee and the Departmental Committee on Finance and National Planning, make realistic revenue projections and attainable expenditure estimates starting with 2024-2025 budget estimates. Mr. Speaker, as a country, we are over budgeting. That is the reality. We are budgeting money that is on paper and cannot be realized. We need to be realistic about our projections. And by the way, our Parliamentary Budget Office, every financial year, has always warned us that the revenue projections that come from Treasury are unrealistic, but we continue and we go ahead to approve them. The sixth cross-cutting issue is spending bills. Related to the above, which I've just mentioned, on budget control and performance, state agencies have seen accrual of huge sums of pending bills, largely blamed on inadequate exchequer release and budget rationalization, after commitments have been made and goods or services have been procured. Total pending bills, Mr. Speaker, to date, as at the time, that is August 2023, as at the time we were conducting our investigations, the figure for pending bills, which is basically loan given to government of Kenya by ordinary business people, has accumulated to 567 billion shillings. And I'm not talking about millions here, 567 billion shillings. So this amount should actually be added to the figure that I see being floated around of our indebtedness as a nation of 11.2 trillion. We are about 12 trillion in terms of indebtedness as a country. Mr. Speaker, I will just give one example. But before I go there, many businesses, Mr. Speaker, have crippled as a result of being owed huge sums of money. People have committed suicide. Those who have done business with the national government and county governments. Local economies have been grounded to a halt because of owing suppliers, contractors money. Banks are auctioning property across the country because of this. But let me just give one example, Mr. Speaker, and that is the State Department for Roads alone. As at 31st December 2023, Mr. Speaker, the State Department for Roads had pending bills of 162 billion, 162 billion shillings, with up to 650 billion of certified works. Really, what that means, the works that are ongoing, all the roads that you see around the country being constructed, their total value, if we have to pay all of them, if they have to be completed, are valued at 650 billion. But works that have been done on those roads, which have been certified for payment and have not been paid, is 162 billion. Now, Mr. Speaker, compare that to how much is allocated to this State Department. The State Department has a provision of roughly 50 billion, meaning that pending bills as it is today, only pending bills, if we were to clear them, we need 4 years, minimum. 4 years, 5 years. To complete, actually 4 years minimum, to pay only pending bills. But if we were to pay all the works, all the roads that you see around being constructed, if we were to pay all of them, we need 12 years. So without even starting a kilometer of road or an inch of road, new road, only the ones that are under construction, we need 12 years to do those roads. That is why, as a country, I think we need to stop politicking and accept the reality that we have been overcommitting and stop any new constructions of roads and continue to complete the roads that are ongoing so that the money that we have pumped on these roads, there would be value for the money that we have already spent. The State Department, it's about time this House bit the bullet, and I've said it, to make radicals.
There is a point of order which I will want to listen to. What's out of order?
Mr. Speaker, I respect the Honorable Bandi because he's a senior, he's a ranking member of this House. But it's not right, Mr. Speaker, for Honorable Bandi to purport that the government, Kenya Kwanza administration, does not have a plan.
What is out of order?
Sorry?
What is out of order?
What is out of order, Mr. Speaker, is that Bandi is indicating that Kenya Kwanza government can only do roads with 12 years. And that is not true. There is a plan. Let him...
Order.
No, Mr. Speaker.
Order. I've been sitting here listening to him. I didn't hear him talk about Kenya Kwanza at all in his statement. I didn't. So unless you point out what's out of order, I would request you to resume your seat.
Let me reframe it, Mr. Speaker, that the government cannot be able to meet the pending bills, plus implement the roads. From where I stand, Mr. Speaker, I know government has the plans to pay the pending bills.
Thank you.
And at the same time,
Don Boruku, you'll resume your seat. And I know you want to speak on this. You'll have a chance to contribute on this matter. No, we'll allow Don Bombari to conclude. Okay, what is out of order, Honorable? And not on what Don Boruku has said.
No, Chair, I wanted to indulge me. Chair, you see, this is the chairman of the Public Accounts Committee, and he's presenting a report of a financial year. So, this is not we are not in a debate yet. When the motion is, when the report is tabled, it has been tabled, but when it is moved the way it's doing and seconded, then we can contribute. But let us give, this is a very important thing.
Correct.
Mr. Chair.
Correct. Now resume your seat and let him do that.
Mr. Speaker, I've been around for a while, so I will reserve my comments on the Honorable Ruku. Mr. Speaker, I want to repeat that if we continue with the current budgetary allocation of 40 billion to the State Department for Roads, we will take 12 years to complete the roads that are ongoing without starting any new one. And that is the reality, and that is on paper. So, Mr. Speaker, let me continue. It's imperative to note that pending bills are not viewed as public debts, and I mentioned that, yet there are sums owed to private individuals and should be treated as such. The charade currently witnessed of forming task forces to verify bills will come to naught if the bills continue to accrue. In any case, these are bills held by MDS and had been processed by ministry officials. In addition to measures cited above, Mr. Speaker, the committee recommends that the National Treasury should only rationalize budgets that have not been committed. Further, and I mean here, when we are doing supplementary budgets, let us rationalize money that has not been committed, but let us not go to departments and start slashing their budgets in the middle of the year, sometimes towards the end or the close of the financial year, when they have already committed, hence the piling of the pending bills. Further, borrowing by the National Treasury to plug budget deficit should be done uniformly across the financial year to avoid the end-year rush of disbursement and procurement in an effort to beat the deadline. You see, towards the end of the financial year is when the government borrows a lot of money, yet they had already factored that in the budget. And in the process, what MDS do is June, you find in June, most MDS are procuring. And so you cross over the year with pending bills. The other issue, cross-cutting issue, the seventh one, Mr. Speaker, is accrual versus cash basis of accounting. The national government has continued to operate under the primitive and outdated cash basis of accounting that poses various challenges in maintaining of financial records. Accrual accounting provides a more accurate view of an agency's financial health by especially factoring accounts receivables and payables. This will clear the long, persistent matter of pending bills and allow agencies to complete programs beyond the end of the financial year, whereas in the current practice sees a rush to expend funds at the end of the financial year. This will invariably need National Treasury to make realistic budgetary projections, as has already been observed above. Mr. Speaker, therefore, the committee recommends that the National Treasury should expedite the full rollout of accrual basis of accounting by 30th June 2024. Mr. Speaker, with the cash basis of accounting we have today, even the pending bills are not in the body of the financial statements. They are found in some notes because they don't form part of our accounts. So that kind of accounting is distorting the financial health of the nation. If we were to treat Kenya as a company, as a going entity, we would be underreporting what exactly is the true health position, financial health of our country. Number 8, Mr. Speaker, or the eighth cross-cutting issue, is interest and commitment fees charged on undrawn loans. Mr. Speaker, the committee observed that certain instances where loans have been negotiated, signed, and committed, but the implementing agency was yet to draw down. In some cases, you find a loan has been negotiated, a contract has been signed, commitments made, yet even land where the project is supposed to be implemented has not been procured or acquired. And this is more prevalent with cases of dam construction in this country. I don't want to repeat the issue of Aror, Kimarer, it is, everybody knows. Dam constructions in this country, the loans are negotiated, contracts are signed, commitments are made, yet even the land where the dams are supposed to be constructed have not been acquired. In these instances, interest started accruing pronto, while the Kenyan people did not obtain utility of the programs. This amounts to wasteful expenditure. Funds cited as commitment fees for the year under review amounted, the year that we are talking about, the 2020-2021, funds that are treated as commitment fees amounted to 2,063,104,537 from 20 loan agreements worth 379,943,389,070 that had no drawdowns. Related to these were various donor-funded projects with undrawn balances that implementing agencies had no capacity to absorb, hence foregone development funds. Worse still, the government enters into contracts that prescribe punitive interest rates for delayed payments, some incredibly 3% above the CBK-based lending rate. Mr. Speaker, sometimes I wonder and ask myself whether the Office of the Attorney General is involved when we are negotiating contracts or signing contracts. You find some of the contracts are signed with the punitive interest rates, some as crazy as 3% above CBK rate. Yet, we know very well that we are not, by practice, we don't pay contractors in time. Yet, we enter into contracts negotiating that in the event that we delay in paying interest, we will pay plus 3% above CBK lending rates. And you see, this is a source where many government officials collude with contractors to fleece and basically defraud this country of much needed resources. The committee therefore recommending the following: that the National Treasury should only enter into loan agreements whose programs or project implementation plans are ready for immediate execution. Accounting officers that fail to absorb such funds promptly and within schedule will be held personally liable and will make good the lost interest, subject to Article 226(5) of the Constitution. 2, the Auditor General conducts a forensic audit on the country's entire debt portfolio and submits a report to Parliament within 6 months of adoption of this report. We also require, number 3, Mr. Speaker, that the Attorney General reviews and approves all financing agreements and contracts entered into by the state to secure public interest. Number 9, Mr. Speaker, on cross-cutting issues is the issue of dual implementation of projects between national and county governments. Mr. Speaker, the committee encountered instances under the State Department for Housing and Urban Development where certain donor projects financed by the World Bank to be implemented by county governments posed an accounting challenge, and especially in Kisumu, Mr. Speaker. If you read this report, this is a big problem in Kisumu. The accounting officer is expected to account for the funds while total responsibility lay with the counties. You find the money is given to counties to spend, implement project, housing project, funded by World Bank, yet it is the accounting officer, the PS of the ministry, who is supposed to appear before us and answer or account to this. The former basically acting as a conduit and had no control whatsoever. Therefore, the committee is recommending that such funds be wholly issued to the implementing agency as conditional grants, rather than the mongrel arrangement that currently subsists. Number 10, I'm moving to a close of these general cross-cutting issues, is non-compliance with the 1/3 rule of basic salary. Mr. Speaker, this is sounding now ridiculous, especially with the housing levy, ETC, the raiding of Kenyans' pockets by the government as we speak through Parliament, which has been passing these legislations. I don't even think that this provision in our law, still makes sense.
That you're moving a motion for the financial year 2020-2021, not the current one.
Yes, I'm just saying that this problem is even going to be bigger. In 2020-2021, I will read what the problem is. It was basically COVID-19, and that we allowed, at one point we reduced the tax rate, then we increased. But now it is going to be worse. But let me just read what is in our report, Mr. Speaker. The committee observed several instances where government employees were not able to comply with provisions of the law and human resource policies on the 1/3 rule of the basic salaries. Reasons adduced were tax reliefs accorded to public officers during COVID-19, but later lifted despite staff committing their net salaries. Moreover, changes in superannuation and tax brackets led to this anomaly as well. The committee observed that there is potential, and this is what I was talking about, of the same worsening due to an uncertain tax regime. Now we are in a very uncertain tax regime. But the committee is recommending the following: that the government ensures staff are not disadvantaged through imposition of tax or other measures on their salaries, and that any new policy regime affecting employees' pay should be capped at the maximum of 2/3 of existing staff basic salaries. I don't know how this will be done, but that is what my committee felt. Failure to resolve prior year matters, Mr. Speaker, is another cross-cutting issue. The committee noted various instances where matters recurred because accounting officers did not implement remedial measures on errors of omission or commission. Whilst awaiting the committee's report for any preceding financial year, it is the expectation of the committee that accounting officers be proactive and incrementally improve internal controls. The committee is therefore recommending that within 3 months of the adoption of this report, all accounting officers should avail a matrix on implementation of various recommendations. This will be alongside the usual Treasury memorandum. The final comment on cross-cutting issues is on resource requirements for the Office of the Auditor General. Mr. Speaker, the Office of the Auditor General requires an independent and well-resourced audit office with guaranteed availability of resources and optimal staffing to enable efficient and effective execution of the audit cycle and to ensure continuous and sustainable audit operations. Over the years, the office has been grossly underfunded considering the huge mandate. The office continues to seek support from Parliament and the National Treasury for enhancement of resources to enable it build technical capacity, expand its presence in the counties, widen the scope and comprehensiveness of audit, and motivate its staff. Mr. Speaker, I am aware that there is a legislative proposal that is, I don't know whether it's already in the House or it is on its way to the House, which is trying to ensure that the Office of the Auditor General, the finances or the funds that are given to it are ring-fenced, that a fund is created for it. That is a welcome move, and I would urge that this House considers giving the Auditor General more funds so that they conduct even a more thorough forensic audit. Mr. Speaker, I'll give you an example that we have just, the Office of the Auditor General has just completed auditing, doing special audit, which was what I would call forensic audit on Article 223, the usage, and also on fertilizer subsidy, and on the sports stadium, which was requested by my committee. If you look at the quality of that audit, it would impress you. That is what we need to see. But that can only be realistic if we have a well-resourced Office of the Auditor General. Mr. Speaker, in a few minutes, allow me just to mention some of the cases that we have referred to investigative agencies, more particularly Ethics and Anti-Corruption Commission, the State Department for Public Works, under paragraph 871. No, I'll start from here. Let me start with the State Department for Interior and Citizen Services, vote 1021. Paragraph 162, irregular procurement, rehabilitation and extension of Homa Bay County Commissioner's residence. Mr. Speaker, we have referred this matter to EACC. Why? Because on May 7th, 2020, a variation was effected to this contract of 6.4 million shillings, which was 56.4% variation, clearly contrary to the specific and clear provisions of the law. Section 139(6) of the Public Procurement and Asset Disposal Act 2015. It's clear it should not be beyond 25%. But you find rogue officers vary contracts upwards to 56.4% with no justification. That is for the EACC to deal with. State Department for Correctional Services, vote 1023. Paragraph 179, there was a collapsed perimeter wall at Shimolatewa Prison in Mombasa due to poor workmanship. Mr. Speaker, first, restricted tender was applied here. No reason for restricted tender. Tender notification was given and contract accepted on 3rd April 2017. And the following day, 4th, contract is signed, yet the law requires that it should take 14 days. Clear provision of the law. And again, after doing work, the wall collapsed. So you can see someone an interest in this. State Department for Devolution, paragraph 185.1, the fund of ineligible expenditure likely to be fraudulent due to submission of forged documents. Mr. Speaker, there is a flood mitigation program in Western Kenya. 388 million shillings given by World Bank to help in flood mitigation. And you just know how our people cry when these places flood. Budalangi, Kano, etc. Money is given to government officials to implement this project. They introduce forged documents. World Bank discovers that you have given us forged document to account for the money. They treat that as ineligible. Yet, instead of Treasury taking action, then Treasury authorizes them that this money should now come from the people of Kenya and misleads this House in 2020-2021 to approve supplementary budget. And we did, Mr. Speaker, to pay for this money, which became payable by Kenyans because of forged documents. EACC, we have given you work. Paragraph 193 is the regular payment of demurrage charges. Mr. Speaker, a total of 75 million shillings was irregularly paid. What happened here is that the government of China decided to give us relief food free of charge and sends it with containers. Then government officials decide to keep those containers here for no reason, and now it occasions loss of 75 million. Mr. Speaker, should we close our eyes on that? Those responsible need to pay this 76 million, not taxpayers. Mr. Speaker, there is, I'm skipping some, there is one for the State Department for Vocational and Technical Training, procurement and payment for consultant services, where a German company won the tender, but the same was executed by a Kenyan firm, which did not bid. So that also we want EACC to look into. There is also under State Department for Early Learning and Basic Education, procurement of computers. 199 million was paid to on 2,040 computers to 200 schools across the country. The State Department used an expired contract of ICT Department Ministry, which expired on 7th November 2019, but we are in 2020-2021. They used that contract to award tender to a firm. That should be investigated. State Department for Infrastructure, variation of contracts. Contracts were irregularly varied upwards, leading to possible loss. For example, Kiambu Regional Office decided to make payments worth 359 million, up from 273 million, variation of 86 million on works, which is 31% above the required amount. State Department for Housing also has an issue that we have referred to the Auditor General on budget implementation, where unbudgeted expenditure amounting to 531 million was spent. We want to know under what circumstances that happened, because that amounts to spending without Parliament's approval. State Department for Public Works, there were vehicles which didn't have logbooks, and we think there is irregularity. The logbooks can't be traced, that needs to be investigated. Ministry of Water and Sanitation and Irrigation, delayed construction of Mwache multipurpose dam project. Advance payment amounting to 85 million was paid. So the ministry tendered and gave a deposit of 85 million, despite not having acquired land for the construction of the dam. So the land has not been acquired, and you give advance payment to a contractor to go and construct in the air, or what are you trying to do? So this is also a case that we have referred to the Ethics and Anti-Corruption Commission. State Department for Livestock, full payment for incomplete works. Marimanti Sheep and Goat Farm. Here, Mr. Speaker, again, a hatchery and poultry house was to be constructed. 100% payment was made, yet site meeting minutes. Payment is made on 12th, Mr. Speaker, of June. Yet the previous day on 11th, a meeting was held on the site, and the works were valued at 82%. As at the time of audit, the works were valued at 85%. So how do you make 100% payment, yet you have only done 82% of the work? There are others, I will skip. There's one under State Law of State Department for Crop Development. There's another one on State Law Office and Department for Justice, 6 million. The judiciary also has issues where over 348 million we want to be investigated further because some district treasuries did not submit and spent amounts. But finally, Mr. Speaker, one of the outstanding cases standing out, which we refer to ESCC, is the case of National Police Service Commission, vote 2101, under paragraph 1775. It was a leasing of counseling center in Karen, Nairobi. Here, the National Police Service Commission entered into a 6-year lease agreement with Swara Safari Hotel Limited from 1st January 2019 for a building. So on 1st January 2019, they entered into a lease agreement, which started on 1st January 2019 for 6 years for 2 plots. One had a building. The other one was vacant for a monthly rental payment of 1,590,000 to be used as a counseling center for all our police officers. The plot with the building, however, had its registered owner as Amazing Tours Limited. At least that is what we were told. But in November 2020, just 2 years after the lease was signed, a notice was given by a lawyer to the National Police Service to vacate the plot, which was being claimed to be registered under Elikona Holding Limited. Elikona sued in March 2021. And the court then ruled in August 2021. It was a very quick case, determined very quickly from March to August. And the judgment was against National Police Service Commission. And the National Police Service Commission was ordered that the commission should pay monthly rent of 750,000, which was close to half of the rent that was being paid in total, from 10th of December 2018, when negotiation was done between the Swara Safaris and the National Police Service Commission. A total of 24,750,000 for the period, plus cost of the suit, was charged or determined against National Police Service Commission. But Mr. Speaker, it is very interesting because as we speak, we don't even know who is the actual owner of this property. But what is interesting is that National Police Service Commission, before they entered into this agreement, were required to have done the search. But the search that they did was done in 2016, and they are entering into this contract in 2018, December 2018. 2 years later, Mr. Speaker, obviously anyone with common sense, which I hear is common, but sometimes is uncommon to many, dictates, and we know how Kenya is, that property change hand almost monthly or every day. There was no due diligence taken. So therefore, we have recommended that the Ethics and Anti-Corruption Commission should look into this matter with a view to prosecuting those who have occasioned loss to public funds. In conclusion, Mr. Speaker, I wish to register my appreciation to fellow honorable members of the committee, the ones that I mentioned, the Office of the Speaker and the Clerk of the National Assembly, and the parliamentary liaison officers of the Auditor General and the National Treasury for facilitating the work of the committee and making the production of this report possible. Special appreciation goes to the Directorate of Committee Services and in particular the members of the committee secretariat for their commitment and devotion to duty. Mr. Speaker, at that point, I would want to state those who have actually been members of audit committees really know how much time it takes to prepare the report on audit committees. Sometimes you work a whole week, sometimes past midnight, to make sure that these reports are ready. Actually, it is like working in an office when you are a member of Public Accounts Committee. Many people, when I was here, Mr. Speaker, in the 10th Parliament and 11th Parliament, we were warned, actually, by our seniors then, that being a member of Public Accounts Committee is very risky for your re-election, because you are basically here most of the time. But we have tried to balance that with constituency work, and I want to thank my members for being diligent. We have only missed one quorum, Mr. Speaker, one sitting where we had lack of quorum ever since this committee was constituted in September, I think, October 2022. Honorable Speaker, on behalf of the Public Accounts Committee, I now wish to move and urge the House to adopt this report and the recommendations therein. Thank you, Mr. Speaker, and I move. And I want to request I will reserve that, but a very dedicated member of my committee, Honorable Dr. Ojiambo Oundo, the MP for Funyula, to second the motion. Thank you, Mr. Speaker.
Thank you. The Honorable Oundo.
Thank you, Honorable Speaker. Let me take this opportunity to sincerely thank our able chairman of the Public Accounts Committee for having moved the report and having presided over the very many and the endless sittings